people are calling the bull market finished again. And I'm not starting with Bitcoin because Bitcoin can chop for weeks and still be okay. But you know what? Most of what you're being told right now is wrong. The cleaner read sits outside crypto and it's a risk gauge serious money checks when it wants the bigger picture. And there's a line in the sand and on the chart, a level that decides whether risk appetite is still alive or quietly switching off. If it holds, you usually get one type of week in crypto. And if it breaks, you get a very different mood, fast. So stay with us because Oz will mark that exact line, prove it with the last cycle, and then bring it back to where we are right now, today. So Oz, in simple terms, what does this risk gauge actually measure and why should crypto bros actually care?
Yeah, it's funny, right? Because, people love halving countdowns. People love 4-year cycle countdowns. Markets don't care about that sort of stuff. Markets care about risk. And the number one, and I've said it many times, the number one risk meter for markets is credit. And markets only care about credit. And if credit is fine, you can get pullbacks. You get pullbacks, you get ups and downs, but you don't go into a bear market. You don't go into a long killer bear market that lasts, years, where prices, people are calling for, especially for crypto, where people are calling for like 30,000, 40,000, 20,000. Unless, if credit is fine, you just won't get that. It's just that simple, really, right? And it's funny that, a lot of people are just looking at, a lot of people look at pattern, head and shoulders pattern, or this pattern or that pattern, and decide where crypto is going, looking at the 2022 fractal and thinking, because Bitcoin is showing similar signs to that 2022 fractal, it's going to be the same. But they don't realize credit was different back in 2022. Credit was falling in 2022, and it was basically telling us that the market is over. So, there's a lot of different things that happen. And if we see that credit is, if credit is fine, markets have air. It's the oxygen of the market, and risk assets can breathe. And prematurely, I think people are calling the end to this market, where, in my opinion, it's nowhere near the end yet. So it's funny. And, the thing that I look at is HYG. And HYG is, not just anything. It's actually the oxygen of the market. And it's it's a basket of corporate bonds and, junk bonds. So if that's bidding, lenders are relaxed, money is easy, and risk assets breathe. It's not what you think that, all of a sudden we're going into a crazy bear market that's going to last a few years. It just doesn't happen. And I know there's that 2008 style crash being predicted as well, which is just so wrong at the moment. It just can't happen while credit while lenders are basically relaxed and money is easy. It just can't happen. If that changes, over the next few months, because it takes months for it to change, not just an hourly chart or 15-minute chart that a lot of people like to look at. It's not about that. So this is why I'm very calm and very relaxed, regardless of the ups and downs. Bitcoin going up $2,000, going down $2,000. Chopping around since I think it was October, November now. I'm very relaxed with this market, and looking at the wider picture is always, in my opinion, something a lot easier to remain calm and see what's coming up in the next
Yeah, so the overview of this, as you mentioned, Oz, an interesting expression like oxygen of the market. Now, it's important where to draw the line, because you've given an overview of how important credit is and this risk gauge. So could you show the viewers watching this the exact level that you're watching right now? And this is very, very important, because, it's not just you're giving a theory, but, historically prove it with one moment from the last cycle where this actually mattered.
Yeah, definitely. And, if you look at my chart here, so this is my credit. This is my macro tab, right, where I have a lot of you could say, charts that I'm looking at, right? And this is my credit tab. I'm not going to go through every single one of them, right? But the one I did mention was HYG, right? Which is basically, it's a basket of risky corporate bonds. Okay, so it's like you can say it's the junk, and if that's basically if it's bidding or going up, then there's no reason to fear that things are over. So when I go to HYG, right, and I'm looking at it, and I'll show you just in this cycle, and then we'll go back to the other cycle of why things are different now. So if we go just back to the last, let's go back to 2024, and this is where we are now, 2026, right? You can see that credit was rising throughout the months of April to September 2024, and then it started just basically chopping around, right? And then you got the big tariff announcement, the big tariff scare. Credit still, this is my line in the sand for credit, this moving average here, right? So this moving average I have, and this is the monthly chart. I don't look at it on the daily chart. I don't look at it on the weekly chart. I only look at it on the monthly chart, because it's very important to look at credit as a longer term. It's not for day trading. This is not day trading. This is not looking at level to level, trying to get in and out of trades. This is long term, big picture stuff. So when I'm looking at this line here, right, this moving average, I'm looking at it, and the tariff news, and it's very interesting. When I said back in April, if you go back to my tweets back into April, March 2025, it was, right, I said that this is basically like the COVID crash scenario, where we are getting a massive sell-off in credit, because the tariffs were very new there back then when Trump was announcing all the tariff news, and things were all over the place. And was money going to get tight? Was the market basically going to get finished, and we were going to go into a long bear market? And I said back then, no need to worry. This is just what I would say is a scare story, because COVID was actually different, and I'll show you COVID in a second, right? COVID was actually different, and this was less than COVID, because it closed back above and then it started making new highs. And where we are today, it's actually no reason to panic, because money is flowing. There's a lot of bidding going on. Lenders are not basically pulling out money. They're actually relaxed, so money is easy, and this will catch up into the markets. So this is this is my key level. So right now, I would say around a monthly close below 79 on the HYG is probably a sign that things are starting to now turn, and we are going to go into a bear market. If this dropped, I'm not stupid, if this dropped over the next few months, and we start closing below a 79 level, so 80, 79 level, right? Then you can start saying, okay, the market now, money is being pulled, and things are tight right now, and sell every rally, because it's not going to be a great show. And if we can see back just in this cycle, so this is this cycle, right, from start to finish, where we are today, it's not coincidence that credit started to turn in September 2022. And if you remember, cast your mind back, the stock market turned in September, October 2022, and crypto turned in November 2022. And it's not a coincidence that credit started to turn back then as well. And within the cycle, you get ups and downs. Don't get me wrong, that happens all the time. But you do not get the bear market. Now, if I go back to the last cycle, right, I'll show you two examples of the last cycle where things were different, and where people, they're looking at one fractal, overlaying it on today and saying this is exactly going to happen. But the problem is you're in two different scenarios credit-wise. And last cycle, yeah, that worked because credit was actually breaking down, and credit didn't break down just because of the fractal. Credit broke down in the last cycle. If you go back to 2021, credit broke down in November. 2021, right here. So below, this is the key moving average that I have for credit, and it broke down. And you could even, if you want to do it in classical terms, monthly support. It broke monthly support, in November, and that's when things started to turn. And remember, we weren't at lows in November 2021. We were actually at all-time highs for crypto, for Bitcoin, for a lot of things, and no one back then, or very few back then in November 2021 thought this was ending, right? But credit already had pre-warned us that this is starting to overheat. And the fractal that we're talking about, when it turned in actually April, when crypto really went down, it was around April, and people are thinking it's the same sort of scenario. Credit already had made 4 months of new lows, breaking new lows in the monthly chart, below the moving average, below every kind of move, telling us clearly that the market is overheated. Get out as soon as possible. Back in January, it was telling us to get out. Back in February, March, April, it was telling us you had 4 months of before price really went down to $15,000, right? So this was around $40,000, maybe 30,000, 35, 40. You had rallies going back up to 40,000. It was telling us to get out, and this is just one credit chart. There's so many that you can look at, but this is probably the most important one that I look at, right? So this was back then. And even if you take it back into the cycle from the COVID crash, and this was the COVID crash here, again, my magic line, my moving average that I have here, breaking down in February 2020. And what happened in March? We had the COVID crash. So even it pre-warned you back in February 2020, watch out here, because we could start having a, money is getting very tight right now. And that was a real, you can say that was real capitulation. That was basically a catastrophe for the worldwide markets, for people generally. That was a hard time for everybody, because that was the COVID virus was actually something that shut down the entire world, right, as you guys probably remember. So that pre-warned us back in February that money is getting tight already. So in February the warning was there that money is getting tight. And March, obviously we had that 50-60% drop in crypto, and stock market dropped about 20-30% also, and then we recovered after that. And just to give you one more example, right, actually let me give you two more examples, because this is something that's interesting. So even if we go back to the 2017 cycle, you can see credit is quite healthy until when? Until December 2017. Again, below the moving average, credit breaks down, bear market, it never recovers. You can see it never recovers, right? And when it was the top of the crypto market back in 2017, it was January 2018 for the altcoins, and Bitcoin actually topped December 2017. But the market was telling us that, this is not healthy. Money is now tight, and Bitcoin and crypto didn't do very well in 2018 and 2019 until, we had the turn. I think it was early 2019. And then Bitcoin rallied to around, it was around $14,000, $12,000. And the thing that people are, the thing that people are really looking at right now is that 2008-7, style correction. And again, credit told you ahead of time that, we're breaking down, and this was the 2008, massive capitulation, massive financial bubble, the recession that happened. Everybody knows, the banks got shut down. Watch The Big Short if you haven't watched it. It's a good film on the actual financial crisis. But credit also pre-warned us back in December, November 2007. Credit is something that you just can't ignore, because it tells you what's happening in the market, the oxygen of the market. And if you're expecting this kind of 2007, 2008 crash, within now in this short time frame, I'm sorry to tell you that it's not going to happen. It's not going to happen unless we start breaking down majorly. And I don't think that's going to happen for, I would say the earliest that's going to happen, if I'm just looking at this chart, if things go really bad, 3 months that would be the earliest, but I don't even believe it. I think it's going to be, a lot longer, and the market's up. I know in crypto, you're looking at the prices, things are going up. Bitcoin's going up. Bitcoin went to $97,000. Now it's at $89,000. These are all just pullbacks and ups and downs that you have in a market cycle. But is the market over? Nah, definitely not. That's just my opinion on this.
Just a quick pause because a lot of people ask where the learning resources are. On the Markets Unplugged website, free section starts with technical analysis, Start, Smart, TA, and the wider TA learning guides. So you can build a proper base and understand price action and market phases without guessing. Then there's fundamentals and macros, Start, Smart FA, crypto fundamentals, and crypto economics, plus the crypto glossary if you want definitions in one place. If you want a clear walkthrough to start with, there's a full beginner guide on how to do fundamental analysis in crypto and technical analysis, and a separate hub for Bitcoin on-chain indicators with straightforward explainers and examples. And if you want tools, there's a free DCA calculator and the bubble rotation map. And if you like listening to audio podcasts, the Crypto Unplugged podcast is available on Apple, Spotify, and all your favorite podcast apps. And if you want the full member experience, Alpha Insider is built around weekly detailed member videos and Q&As. It goes beyond what we can cover on YouTube. The weekly members videos and Q&As are longer and more detailed, and they're built around the actual levels and timing notes for the weeks, with Bitcoin, Ethereum, and altcoin key levels and the reasoning behind them. DCA in and out levels mapped using technical analysis and Fibonacci levels, plus timing analysis using Kairos, so plans are made early rather than late. You also get access to the private members Telegram group with several channels for market updates and real-time discussions, where the team and community share daily context on events, analysis, and what's developing across the crypto market. You can find a link in the description. And now let's get back to the video. Yeah, now look, just according to that, not financial advice, do your own research, whatever. And look, we're just giving you our views related to how we're seeing it from a top-down approach. And, in essence, what you could do is look at this chart, Oz, okay, and stay away, touch some grass, stay away from the daily charts in crypto and altcoins, and just see, for example, from here, and you can understand that we've actually got a lot of time, left in the market. Like you said, whether it's 3 months or 6 months or a lot longer, that's just something that, we don't know. But according to this and according to previous cycles, you've drawn the line in the sand. You've given examples from previous examples as well. And I'm bringing it back today, Oz, and where we are sitting relative to that line. You mentioned 3 months. What will be the first sign, in your opinion? And you did, give an overview that it's like starting to fall off a cliff. Because an interesting story here, Oz, and I'm sure many of the viewers would like to probably listen to your personal experience of how you second guessed Oz in the last cycle when you knew that the signs were there falling off.
Yeah, so if you look back in the last cycle, right, after the COVID crash, capitulation, you go back up above the both moving averages, basically in July. So July could have told, July would have possibly told you that things are okay, so you can get back into the market, in July 2020. And, back in July 2020, if we quickly go to Bitcoin in July 2020, right, you're basically here before the massive move up, right? So July 2020 is telling you that there's basically oxygen in the market now. Things are okay in terms of credit now. So around here, right? But when were the warning signs, right? The warning signs, to be honest, for crypto back in 2021 was around, I would say, October 2021. When you're starting to break down the supports. So we made, if you think about it, back in 2020 and 2021, even discounting the moving averages, right? You make a higher high and then you make a key level support at around 87, right? But in September, October, you break that support. You break it and you close below the support. You try to gain it back in November, but again, it's a further confirmation. October, November was telling us that, the market is basically overheating. So if we go back to October and November of 2021, that was basically the top. Now people are expecting this to happen now, right? This to happen now. Remember, this was April 2022, March 2022, February 2022, and Jan. So this period for Bitcoin that people are saying it's now, so they're saying the same thing here, right? It had already pre-warned us. If we look at it back there, credit already pre-warned us back in October 2021, but by February, March, April, it was well on its way to, that if that was happening right now, I would honestly be saying the market is dead. Get out of the market, because we're going to go down another 50-60% possibly as crypto kind of crashes. But right now, I say there's life in the market. Money is relaxed. So, I'm not second guessing this credit chart. So where I see us right now, possibly we could be, in this sort of scenario, May, June scenario. And even if I think about this, right, you might be thinking, oh, but it's gone down to 30% and things are going down 5% every day. And, things like this, right? Remember, when credit was fine, Bitcoin actually went down from 65,000 to 29,000. So Bitcoin actually went down. If we look at price range, right, Bitcoin went down 56% while credit was fine. Pullbacks and deep pullbacks can happen, but it wasn't the top of the market. There was still 1, 2, 3, 4, 5, 6 months left until credit told us now it's over. So for me, you can look at your lovely head and shoulders patterns or triangle patterns or this pattern or that pattern. It makes no difference to me until the real macro charts start turning, okay? Until the real deal starts turning in terms of credit, and there's a lot of credit charts out there, right? And then you can say, then I will say, yeah, hands up, the market's done. But as of right now, you can keep drawing your patterns.
Okay, so there you have it. That's the takeaway. Don't argue with 10 different narratives and, like was mentioned, the head and shoulders patterns or whatever patterns that you need to do. Watch the line in terms of what credit. 79 is a key figure that you need to have a look at, and then observe how the market behaves around it. If it holds, you're usually in a risk-on month where pullbacks behave like pullbacks, and if it cracks, that's when the mood shifts and things can get ugly pretty quickly than people expect, like we saw in the last cycle. And quick question to you viewers, what about you? What do you track for risk, macro risk gauges at all? Do you track them, or is it 100% crypto charts only? Drop that in the comments, and see you guys in the next one.